Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry and today is Thursday, April 7. The time is 1 a.m. GMT. Today we are looking at the chart of the DAX, a 60 minutes chart right here. This is a Germany index, stock index, and we can see a couple of things here. We ended with 2, right? This is a This is, let me double check which degree this is. I believe this is a higher degree. I think like a cycle degree, I believe. Yeah, cycle degree. Now inside the website, inside the member area, we have this label here, this table that tells you the different way the label is being expressed, and also the degree of each expression of the different label here. So this 1 2 here in the red in capital letters is a cycle degree. Okay, so it's a higher degree here. Cycle is a pretty high degree, and from here what that means then is we are now in the wave 3 in the cycle degree, and within the wave 3 we subdivide into 5 waves. So we have this 1 2 3 4 5 ending 1, right? This is the intermediate degree, so we have ended with 1 here, and then now we are in the process of doing this with 2, and with 2 is we proposing it in the form of a 7 swing. So we have this ABC zigzag which forms the first 3 swing and which ended with W. Then from there we should be getting X, which is to correct this 3S pullback, and then from there we will have another 3 swings down in the form of another zigzag. So we will have 1 2 3 4 5 6 7, right? So a WXY is technically a double zigzag, right? A lot of people understand it as a double zigzag, even though technically speaking it doesn't have to be a zigzag. It could technically be any corrective structure within the W and the Y here. Okay, and a lot of people also not very familiar, especially if you are new to Elliott Wave and you just start learning. I think a lot of people understand ABC, but they got a bit confused about WXY for the new traders or new waivers, right? So now we are looking for a double zigzag or a double correction, or a WXY or a 7 swing, all of them same name. Then once that is complete, as long as it stays above this 12,420, we can then continue to go higher again. Now in the very short term, we can see we have already almost reaching the 100% of the C leg. So soon I think we can get the X rally here. So this is the 100% extension area between 14,020 and 13,663. We can get a 3S rally from there at least, if not going to new high, right? So remember, it is basically based on this view, it is eventually expected to extend higher as long as it doesn't break below 12,420. The only question is, are we going to be correcting really in a bigger 7 swing, or wave 2 can always finish just as a 3 swing instead of 7 swing, and then we can rally also from here, right? So that will be in the alternate scenario. So in the shorter cycle, it's very simple, guys. The view is this invalidation level. As long as it stays above here, we expect more upside. Now let's take a look at the larger degree and make sense of the larger degree. Now I'm gonna put this width 2 in the cycle degree. When I look at the weekly time frame, that width 2 is gonna be in the same here, right? It's the same level at 12,420, which is this level. So if this is a width 2, then obviously this is your width 1, and if this is your width 1, that means we are talking about the starting point of the width 1 has to be over here, which is March 2020. This is the COVID-19 low. So according to this view, then what that means is we have this COVID-19 low when we got a sell-off, major sell-off in the indices, and we since then already rally, and we've been rallying quite a while here until 2022. So it's been 2 years rally. So we ended that rally here. That's your wave 1, and we are calling this pullback of this rally completed here as a wave 2. Now, of course, for this view to be valid, you need you need to you need to actually break above wave 1 again. Only a break again above wave 1 is going to fully confirm this is the end of the correction, right? So technically speaking, this is automatic, right? This is automatic. Alternate view always exists, regardless whether you like it or not, but alternate view always exists. And until we break above wave 1, this technically can be doing a double correction. And that is given, right? That is given. Everybody knows that. Until it breaks above wave 1, you can do double correction, which means we're going to be looking to do a bigger 3-swing pullback if that's the case. Now, so that means Elliott wave or trading is a game of probability, right? It's always a game of probability, and therefore risk management and everything is extremely important, right? And the job really as an analyst is to understand what are the probabilities and give the primary view. The primary view technically is what the analyst believes is the most probable path, right? Now, if you take a look at this rally from here, that does look like a 5-ways impulse. Again, going back to the 1-hour time frame, this is the rally from this low here. This is really based on what you think. Do you think this is looking like a correction to you, or do you think this looks like an impulse to you? Now, if you think this looks like an impulse, then it makes sense to have another leg up. It's as simple as that. But if you think this is like a 3 waves correction, then I think it's more likely to go down, right? But if you look at the subdivision, the question that you have to answer and you have to conclude is, is this what sort of structure is this, right? Again, if you look at the higher time frame, it does look like a 5 waves, right? It does look like an impulse. Especially if you look at the weekly, or let me downgrade to the daily here. And like the daily also looks better as a 5 ways, right? So overall, what that means then is, as long as we stay above 12,420, we can get another leg up. Alternate, what if we just continue to plunge and not rallying at all? Well, that means we're going to be doing double. If that's the case on the weekly, then we're going to be in trouble, and we can go down all the way to, like, next one is 11,000, which is over here like this, right? So that will be the alternate if we fail to rally again well above 12,420. Okay, but primary view is what you are seeing here. Just the fact that I discussed the alternate view doesn't mean I will be right no matter what. No, the primary view is still calling for another leg up as long as it stays above 12,420. If it breaks below, then that's wrong, right? It's simple as that. But if it is wrong, then I give you what the alternate is, which is going to be doing a double. And the reason we are calling it up is because it does look like an impulse from here. So as long as we stay above here, therefore we can see another leg up. So if you do want to get regular updates on stocks, indices, forex, commodities, we got 14 days trial. The link is in the description of the video, and I'll see you all again next time. Have a nice day, everyone.